Hello and welcome to this. Hello and welcome to this live stream about the basics of insuring your village hall, the type of cover you need, and how this protects your organisation and members of the management committee. This session is being hosted by Acre, but delivered by our corporate sponsors Zurich, who provide specialist insurance for village halls. Zurich are very kindly sponsoring our village halls advice and information service, which is offered through our members to halls throughout rural England. As such, I'm pleased to be joined by Steve Gettings, who will be providing a short presentation, and also Natalie Longhurst, who will join us at the end to discuss any questions you might have. Before we get going, we'd very much like to stress that this is intended to be an interactive session where we're keen to answer any questions that you might have. If there's anything you would like to ask of us, please put your questions in the comments box on Facebook or YouTube. We'll pick these up after Steve's presentation. Anyway, Steve, over to you.
Thanks, Philip. Yes, my name's Steve Gettings. I work for Zurich in our Chichester office. I'm the sales manager. We deal with small and medium-sized charities, so we're very familiar with village halls of all shapes and sizes. Philip, if you could pull up the slides, if possible. Thank you very much. So what we're going to talk about today, we're going to talk about various different things. It's going to be pretty much the basics of insurance. So how does insurance help your village hall and its trustees? What lines of cover should you consider, and are there any legal obligations? We'll talk a little bit about what you might want to consider before you buy insurance. And also we'll talk about risk assessments for a bit. Now, risk assessments are something that we commonly have conversations with customers about. There's various different knowledge levels within the sector. So we'll talk a little bit about that and why insurance companies ask for them. And then we'll go to a Q&A at the end. So as Philip said, this is going to be an interactive session. So I encourage you to put questions into the comments. They will all come to me. I'm very happy to address them all the best I can. There's no question too stupid or too complicated. Anything that you can or want to ask, please do. Anything I can't answer immediately, I will do my best to take away with me and get an answer from you. So the session or the slides should last around 15 minutes. We'll go through everything and then we'll go to the Q&A at the end. So how does insurance protect a charity and its trustees? So as a trustee of a charity or a village hall, one of your duties is to protect the charity and its assets and resources. And buying insurance is one of the ways that you can carry out this duty. So the nature of the insurance that you will buy is completely dependent on what type of charity you are, what activities that you run. and what assets that you own. So all of these things are taken into account when you consider buying insurance. So we'll go through a little bit more detail on that, what lines of cover which risks. So these are the most common types, I would say, of things that people consider when they're buying insurance. So damage to property, buildings and contents, that will be very relevant for you guys in the village hall space. Some of you may not own your buildings and you may just operate from them, but you may still insure contents within them. Interacting with members of the public, which almost all of you will do, I'm sure. Holding public events, another consideration. Interruption to your activities and loss of income. Now, this was a very sort of hot subject during COVID, of course. So that's something that's been brought to the surface. Not a lot of people are really clued up on covering that as a risk. Now, as a village hall, that might be a consideration. Again, we'll go into that in a little bit more detail. Having volunteers, of course, I'm sure almost all of you have volunteers, and we'll talk about that. Trustees' personal assets, we'll talk a little bit about trustee indemnity and how you can protect those. And we've already covered off, that's a duplication, apologies about that. So legal obligations, we quite often get asked, what insurance do I need to have? And the answer really is there's only two main insurances that you need to have by law. The first of those is employer's liability. So if you have paid staff, you are required by law to have a minimum of £5 million employer's liability cover. And in essence, that provides cover if you cause injury, including illness or death, to an employee whilst they're working for your organisation. And really, it is as simple as that. So those of you with employees, hopefully you will have your employer's liability insurance. You certainly should do. If you haven't, I would encourage you to address that as soon as you possibly can. Now, what else is a legal requirement? Motor. Now, all of you will be familiar with motor. I'm sure you will insure your own personal vehicles. Charity vehicles are no different. That's a legal obligation to insure them if you have them. Now, there are some very rare occasions within the sector where public liability is a legal requirement, such as things like horse riding schools. That's not relevant today, so I won't cover that off. But yeah, in essence, they're your legal obligations. Now, moving on to what other lines of cover should you consider. I'm going to pick out a few of the key ones and then more of some more nuanced ones as well, some less common ones, but we'll go through them all. I'll give you a headline of what they cover and why you might want to consider it. So public liability is probably, as an insurer, the main line of cover that we provide to our customers. So that protects you as an organisation if you cause bodily injury or damage to third-party property to either a member of the public, in our case, volunteers as well. So we'll talk a little bit about that now. So every insurer is different. So there's always a question, how do we cover our volunteers? Some insurers will class volunteers as employees and ask you to take out employers' liability to cover those volunteers. There are other insurers such as Zurich where we cover volunteers under public liability. So that also provides cover for your injury to volunteers as well. And in a nutshell, that is it. So that is the most common line of cover that we provide. Trustee indemnity. Now, this is, again, within the sector, something that carries some misconceptions. So trustee indemnity essentially provides cover against trustees' personal assets if a claim was to be brought against them for financial mismanagement. So in their position as a trustee, if they accidentally make an error or an omission, essentially a decision that results in a financial loss to either the charity itself or a third party, then it protects the trustee against claims made directly against them. It doesn't cover things like acts of fraud, so it does have to be accidental errors. So that is trustee indemnity in a nutshell. Material damage, buildings and contents, I'm sure you're all relatively familiar with that. Some of you, I'm sure, will have that in your personal lives. And that is covering, as it suggests, damage against for buildings and contents. It will cover things like flood, fire, accidental damage, theft of contents, etc., etc. Business interruption. Now, I touched on this a little bit at the start. So business interruption provides cover for your organization to recoup lost money if there is an incident which results in a claim on your building. So if you have a fire, for example, you might lose your high-risk fees that you receive throughout the year. Now, if you're a large village hall with lots of operations, that could be a lot of revenue that you're losing, essentially, because your building is not in operation. So what business interruption will do is provide payments for those lost revenues that you have during the period whilst your building is being rebuilt, essentially. Legal expenses. So legal expenses, mainly, it has lots of different covers within it. It's quite a detailed line of cover. At a really basic level, it provides cover for things like employment and contract disputes. So if you are a charity that is considering making redundancies, for example, there's cover there if you want to consult with someone on how to do that, and then any potential employment tribunals that may arise off the back of that. Now, insurers generally outsource this cover. That's really common. There's about 2 or 3 main insurers of legal expenses in the UK. One of them is DAS. Some of you may be familiar with them, and they also offer lots of free advice as well to their customers. But essentially, it's things like employment disputes in the main. And just as a reminder, if there are any questions or any clarity points, please do pop them in the comments. We'll come to them at the end. Highly encourage you to do that. High-risk liability. So bear with me while I take a sip. This is going to be a line of cover that is really relevant to you guys in the village hall space. A lot of you will know what it is and have it. Some of you may not and may wish to consider it. So what it does is provides protection to your customers, your hirers of the village halls, where those hirers don't have their own public liability insurance. So it essentially gives your hirer their own public liability insurance whilst they're operating from your premises. So if, for example, you didn't have the high-risk liability and you hired out your hall to someone without their own public liability insurance, they were responsible for damage to your property, whether that be a large fire, for example, you would not be able to make a claim on insurance against them for that. You would have to claim on your own material damage insurance, and that would then obviously affect you in the sense that you have a claims history against that. So also, it's a real benefit a lot of the time for being able to hire out your hall. It encourages hirers, because you can say to people, we have high-risk liability. We wouldn't expect you to have your own public liability. Now, really, it is designed for small community groups or informal groups. Any commercial organisation or bona fide charity that are hiring your premises should generally come with their own public liability insurance. But it's perfect for things like children's birthday parties, weddings, those sorts of hirers where you wouldn't expect them to have their own public liability. So that's, I think, a really relevant line of cover to you guys. Any questions on that, more than happy to try and answer them for you as well. Professional indemnity and professional negligence, probably not so relevant to you guys. That provides cover for organisations that provide professional advice to third parties where a fee is charged. So if you charge a fee for things like advice on benefits, for example, in the charity sector, that would commonly where it would be taken out. For you guys, probably not necessarily as relevant, but if you're not sure, have a read in detail and see whether it's appropriate to you. Libel and slander, as the name suggests, obviously we know all about this at the moment with the Johnny Depp and Amber Heard trial. This is kind of what this insurance covers. So libelous is being the written word and slander being the spoken word. If you as a charity write or say something which defames a third party and they make a claim against you, this line of cover will come into play. Fidelity guarantee or crime cover. So they're the same cover, but they are called slightly different things. So that essentially covers dishonesty from members of staff. So if they steal from the organisation, generally cash, but it's fraudulent acts or activities by employees or volunteers. Business travel, again, very, very similar to what you would have in your personal life when you go away and on your holidays. So that will cover things like cancellation, loss of baggage. When you're abroad, it will also cover things like kidnapper within it as well. So there's lots of different elements to that, but in essence, as an overview, very, very similar to what you would take out in your personal lives. So we've covered off sort of the basic lines of cover within the sector. So what do you need to consider before you actually buy insurance? So the first is to make sure that the person that you allocate to speak to the insurance company has a really good understanding of how you operate. Now, that may sound like a given, but you would be surprised. We do speak to a lot of customers that aren't really sure how they deliver their services and activities. So it's really important that you have a good grip of what you do, how often you do it, your wage roll numbers if you have paid staff, how many volunteer hours that you receive on a weekly basis. These are typically things that insurance companies will want to know. So make sure that you have a grasp of that, you have a good understanding, and just be ready to answer questions about your services and activities. Now, if you work closely with children or adults at risk, insurers will often want to know and ask you about your safeguarding policies and procedures as well. There may be questionnaires that you need to complete along those lines, especially for higher safeguarding risks, such as groups that deal with disabled adults or children on a one-to-one basis, or children in general under 18s. So safeguarding, definitely ensure that you're aware of your safeguarding procedures. Quite a common question that we get asked are, do insurance companies act differently depending on what type of not-for-profit organisation you are? Do we need to be a registered charity? From an insurance perspective, certainly from Zurich's perspective, no, you just need to be a not-for-profit organisation, whether you're a CIO, whether you're a CIC, doesn't really have any bearing on the insurance. So that's from a Zurich perspective. I can't speak for all insurers, but I would imagine that is pretty common within the industry. This one is definitely really, really relevant to you guys. It's conversations that we're having a lot with our customers at the moment. And that is around accurate sums insured of your buildings and contents. So buildings and contents are typically insured on a new for old basis, meaning that if we take your village hall, for example, if it were to burn down to a crisp, it would be the cost of replacing or rebuilding that building back to its former glory, essentially. And that would include the costs of ground clearance, all the labour costs, everything taken into account. So it will be slightly different to your market value of the building. So if you were to put it up on the market for sale, it would be a very different value to that. Now, why is that important, or more important than ever at the moment? And the reason is due to the cost of living and the cost of supplies, essentially labour. Everything, as you will know, is increasing in price. That includes the cost of materials, labour. So it's really important that you have an accurate rebuild value for your building. And the reason it's important is if you were to have a claim, there's a clause within the insurance industry and within all insurance policies called the clause of average, or the averaging clause. And what that means is if you insure your building and you have a successful claim, the insurer reserves the right to reduce the percentage of that claim to the percentage that you underinsured by. So a loss assessor or a loss adjuster will go out, they will have a look at how much you insured your building for, then have a look at the true cost of repairing it. Let's take an example which is really easy to do the maths on. If you insured a building for £1 million and the insurer insisted that the true real value was 2 million, the insurer would only have to pay 50% of the claim, i.e. £500,000. Now, that's not to say that is always done. There are obviously occasions where insurers will act in good faith and as a result of trying to get a good customer outcome, will pay the loss in full. It's all looked at on a case-by-case basis, but nevertheless, it is really important that you have an up-to-date valuation. Typically, we say that you should have a valuation every 5 years. So if you haven't had it in a while, I'd definitely recommend looking at that. Okay, so risk assessments. Again, this is something that when you talk to an insurance company, they may ask you if you carry them out. You may or may not do that, or you may agree that you don't do them at the moment, but you might do them moving forwards. So what are they and why do we ask for them? So put simply, they are identifying and managing risks that your organisation faces. So for charities, that might include reputational risk of injury to service users and volunteers, risk of damage to property, essentially anything that you believe could result in a claim. So as your position within a charity, a senior position within a charity, you have a duty to ensure the safety of those, as we've already discussed, and part of that is risk management. So a risk assessment reduces the chances of a claim occurring, which is one of the main reasons that insurers ensure that you carry them out. So what can they look like? So the general process on how to manage risk, there's a really simple 4-step process here, and this can be used to identify and manage risks that you face. So number one is identify, okay, what risks do we face? Where could a claim arise? Where could an incident arise? Assess, so how likely is it to happen, for example? How risky is it, essentially? And then prioritize, what do we need to prioritize within those risks that we've identified? And then decide if you need to take any action. So are there any actions that we need to take based on the risks that we've identified? An example would be, okay, a fire risk to your building. Where do we keep our bins? Are they too close to the building? You know, if there's an arson attack where someone sets fire to the bins, would that fire then join the building? Would the building then go up in flames? As one example, that is something that you might want to consider. So that's a really useful 4-step process. We do have an interactive guide to risk management, and the hyperlink is there. You're more than welcome to follow that hyperlink and have a read. There's lots of really useful information there about risk management. We're very aware that it's something in the SME space within the charity sector. Not all customers are fully clued up on it. So do take time to do that. And this page just gives some useful resources. I'll leave this screen up for a few seconds just so you can have a look and jot down any URLs that you want to face. But news and insight, that's essentially where we as Zurich post lots of interesting articles about various different topics, not necessarily insurance related. Very recently, we did one about how to organise a successful Jubilee event, which went down very well. So there's lots of different articles on there. You're more than welcome to go and read those. And then there's some more insurance specific things. So there's a video series as well on our website, which explains the different lines of cover in a bit more detail. There's a risk assessment template, which is really useful. So yeah, please do feel free to follow those links and have a read, have a watch. They're really, really useful. So I think, yes, we are. We've come to the Q&A section here. So I think Philip and Natalie are going to jump back on the screen and field those questions to me.
Yeah, thanks, Steve. That was really useful. Lots of really handy information in there. And we have had a few questions come in as well. So conscious of time, we haven't got a huge amount of time, so we'll get through as many as we can. And those that we can't answer, we'll sort of try and post something online with some of the answers to afterwards. The first one's an easy one, which I think I could answer. So Lindsay asked if the slides will be available after the live stream, and the answer is yes, they will. There will be a recording of this available, so it will be online on Facebook and YouTube, so you can watch it and share with others afterwards as well. Next one, I'm definitely going to pass over to you, Steve, because it's more of a technical one on the covers. So Terry asked, what sort of insurance do we need for off-site community events? So the example there was taking a coach trip, for example, to the theatre. Yeah,
great question, Terry. So it really depends on what risks that you're concerned about. If you're talking about causing injury to service users, for example, your public liability insurance, if you have it or you're going to take it out, that will essentially follow you, or it does certainly in our policy anyway, it will follow you around the UK. So whether they're trips to the theatre, trips outside, even trips to the other side of the country, the public liability will follow you and will cover any potential incidents that as a result of your negligence. So it should be covered under your public liability if what you're concerned about is things like causing injury to service users whilst you're on the trip, for example. If you actually go to the theatre, for example, and there's a trip or slip within the theatre, it's highly likely that that would be the negligence of the theatre company, dependent on the incident, of course, and what actually happened. In that case, it would be the theatre company's public liability that would pick up the claim. But good question. Thank you.
Well, thank you. And then we've actually had a couple of sort of very similar questions on this one around how can village halls get a reasonable valuation of their rebuilds, so kind of where to go for that.
Yeah, that is something that we don't necessarily directly advise. So there will be surveyancing firms local to you. They could be national. I would suggest just having a Google of building valuations for charities, and you should get plenty of options on Google.
Excellent. And then there's one which is a bit more specific. And again, I guess we might be able to look at what our cover provides, but it's important to check with the other insurers. So the question is, do we at Zurich support halls who want to install a key safe for their hirers to use to access the hall, or is that a no-go? And two parts, anything else that halls need to think about with regards to keys, key fobs, electronic entry and their systems and all that kind of thing?
Yeah, really, really good question. Really relevant to you guys in the village hall space as well. I would say if you haven't already discussed your building access with your insurer, please do, just to make sure that they don't have any terms. We, off the top of my head, as far as I know, we don't have any specific terms around key safes, but we would always have a discussion with you about it and make sure that we were happy with how you were managing that risk. So, for example, if it were to be a key safe, we would potentially ask what position within the charity do the people that have access to that key safe, what position are they, how many people have access to it, etc., etc. So every insurer will be different. If you're unsure of your current policy and what the terms are, just speak to your contact at your insurance company and they'll be able to guide you through it.
Brilliant, thank you. And got a couple more minutes, so just one last question around, we spoke about lots of other sort of different types of cover. Are there any others that are available that we should consider? So I think one that was mentioned was personal accident cover. Is that one that we should consider or not?
Yeah, personal accident is another good one that a lot of groups do choose to take out. So personal accident is what we call a benefit policy. So what that means is that it will not cover acts of negligence on behalf of the organisation. It's more of a benefit to your employees and volunteers. So if they are injured whilst they're working for your organisation, not due to negligence, then dependent on the severity of their injury, will pay out a sum of money or a weekly payout, again, dependent on the severity of their injury, which you can then choose to spend how you wish. So you could give it to the individual that was injured. You could use the payout to source more volunteers or a replacement employee, for example. So it's more of a benefit policy rather than a negligence policy, if that makes sense.
Yeah, brilliant. Thank you very much. So yeah, I think we've managed to cover quite a lot in that time. So as I say, just to reiterate, everything will be available online afterwards. But yeah, from my point of view, thank you to Aker for letting us run the session, and really good to hear all those questions from everybody.
Great, it's a pleasure, and thanks so much for sharing this really useful information this morning. One thing I would say is if village halls have more general sort of questions around governance or running the halls, we have a network of village hall advisors based in every county of rural England. So do take a look at our website and head on over to our member organisations if you're after that more general advice. But otherwise, do speak to Zurich as well about the insurance that they're able to provide, and look at some of the resources that they've shared today. So thank you.
Thank you very much. Thanks all.